The South African economy continues to struggle and faces significant headwinds going forward. Old Mutual Investment Group economist Johann Els says the medium to long-term economic growth prospects are dismal despite a very supportive global environment.
Political and policy uncertainty are dragging down growth. This has seen the International Monetary Fund revising downwards the growth forecast for the country to 0.7%, in line with the Reserve Bank and World Bank estimates. The IMF says this is due to heightened political uncertainty, depressing consumer and business confidence. This means the country is not benefiting from a more favorable commodity export prices and strong agricultural production. Old Mutual says the weak economy is severely impacting on tax revenues and there is a possibility of a budget deficit increase.
The biggest drag on the SA economy is political and policy uncertainty. Because of that lack of uncertainty, consumers aren't confident, so consumers are not spending. Businesses aren't confident in the future. Because if there's no economic growth, there's no economic impetus for them to invest. That lack of consumer spending, business investment means the economy keeps on growing at a far slower pace than it can. So that in turn means there's a huge impact in terms of revenue collections, tax collections by the government. That means budget remains under pressure. Big budget deficits continue to impact on debt levels. That means ratings agencies are rightly very concerned about the ability of the South African government to repay its debt.
The uncertainty is also forcing investors to put their money elsewhere.
Instead of saying, okay, we've got confidence, we are going to invest, the investors are sitting there saying, actually, let's hold back, let's watch what we're doing. And then more often, actually, investors are saying, well, let's diversify, let's invest outside of South Africa, which is, I suppose, where we come in and say, actually, there are other emerging markets which look like South Africa, which maybe are growing faster and have more interesting investment opportunities. So we're finding that a lot more investors become interested in diversifying outside of South Africa, because ultimately what an investor doesn't want is to lose their money. And uncertainty, especially political uncertainty and economic uncertainty, makes investors fear that they're going to lose their money. And so therefore they just take their money out of the country, which is not good for the country, obviously.
Old Mutual says the key risk South Africa's ratings outlook remains poor growth, which impacts on the ability to achieve budget targets and on the sustainability of the debt ratios. It says the medium-term budget policy statement later this month will provide a clearer picture of the likely outcome for the full year, but markets will also closely watch what actions the finance minister will be taking to keep the fiscal situation under control. But the continued underperformance of state-owned enterprises add to the vulnerability of the fiscus and the ratings outlook. SABC News, Johannesburg.